Brilliant. Thanks very much indeed, Charles. I'll start my stopwatch so I don't go on for too long and bore you all to death. But I'll just start really by saying thank you very much to Evershed Sutherland and Minas Associates for inviting me to speak this morning. It's great to see such a full room, and thank you to everybody for making it out here today. So I'm Hamish Clegg. I've got 15 years experience as a sell-side analyst at both J.P.Morgan Bank of America, where I was an oil and gas analyst. Highlights included IPOing Rosneft for one, and various other capital raises across the space, but I was involved in over 10 IPOs there, and I joined our ex-head of capital markets, J.P.Morgan, Hannam, when he set up Hannam Partners. I spent the last 2 years at Hannam Partners as an oil and gas capital markets banker. I've been to Guyana twice this year. My CEO's probably been 4 times, seen everything firsthand. Yes, the KFC on the way in is guarded by a man with an assault rifle, so it's a little unnerving when you first go there. There are a lot of automatic weapons. It's a one-story sort of city, if you like, and it's largely made of wood, and there are only 3 hotels, and really only 2 of them are suitable for oil and gas expats to stay in because they're made of concrete and glass, and everything else in the country is made of wonderful 100-year-old wood. All the hardwoods that come from the forest. But we're here to talk about the opportunity. I think most people here know many of the numbers. Exxon's made 14 out of 15 discoveries since 2015. The success rate in the exploration arena is phenomenal and unprecedented, with 88% success. The company have guided to over 6 billion barrels of oil from 3 different play types. I'm sure the geologists here know the difference between the stratigraphic traps in the Cretaceous horizons, the carbonates and the upper tertiary, all of which have had varying different successes. And we've got 1 or 2 other big companies there that we'll come to, and you can see them on the slide. But I should add, Exxon have just added a 4th drill ship. The Noble Don Taylor came on in October 2019, and I'm pretty sure there are 2 more drill ships coming on in quick succession. Staybrook's obviously being the centre of excitement here, plenty of prospectivity, but I'm going to also talk about a few of the other opportunities going on in the country and try and give you a little bit of a flavour about Guyana as a country, as an economy, and a place to invest. Before I do that, I'll give you a very brief overview to us. I know many of you in the room know who I am and know who we are, but we're effectively a privately owned investment bank based in Mayfair. We do M&A and capital markets banking. We're good at raising money and advising on pretty complex situations in interesting parts of the world. I think our reputation precedes us in many cases. We've got a sort of a decent experienced team. That's some of the senior leaders in our team. So we have a deep bench of people very, very focused on the oil and gas space in a world where most people now do oil and gas, utilities, a bit of renewables and a bit of mining thrown in. Everyone on this page is a dedicated oil and gas individual, with the exception of Ernie, who runs our technical capital markets process. I'm going to just do a whistle stop because you care more about Guyana than me. But in terms of where we are in the world, we're involved in a number of very, very interesting deals in different jurisdictions, ranging from working from the UK government to old friends like Tony Buckingham in West Africa. But I would really like to draw your eye to the bottom left of the chart, of the slide rather, where Eco kind of coming in number 1. They're a retained clients of ours. We write research and have helped them raise money in the last 12 months. JHI is a private company in Guyana. We raised close to $5 million for them a year ago. They're in the process of discussing further capital raises at the moment and are drilling next year. Catalaya, we're working with right now, raising money for them to drill 2 wells in Guyana next year on their Kaitua block. And Total Tech is the sole sort of main oil service company in Guyana, who we're also working with to raise them money and help them build out their growth profile. I've slightly changed my own little title on this, saying Hannam Partners is coconuts about Guyana. You know, for me, Guyana is basically the next Brazil. Markets are a little less excited about it than they were back in 2006 and 7 when there was an awful lot of euphoria. But in terms of the size of the prize and scale of what we're looking at, 6 billion barrels looks fairly likely to grow to north of 10 within the next 5 years without a huge amount of pushing. But for us as a bank, my CEO, Neil Passmore, he is so keen on Guyana that he's set up a coconut company, growing a plantation on a block of land that he's taken on the other side of the Essequibo River. What that's done for us, other than satisfying his passion to be a farmer, he was got a first in biology from Oxford, has given us very, very close contacts with the highest levels in government in the country, key commercial and political stakeholders. David Lammy is in fact one of the senior figures on Neil's board, and that's basically catapulted us into the sort of higher levels of relationships in the country. A little introduction to Guyana. Some of the sort of basic facts and figures. It's the smallest it's the third smallest state in South America, and one of the only English-speaking countries in South America. It's got a population of only 780,000 people, bearing in mind about the same number of Guyanese live elsewhere in the world, many of which are in Canada. They gained independence from the UK in 1966 and became a member of the Commonwealth in 1970. They have major trading partners in the forms of Canada, the US and the UK, which receive nearly 55% of all exports from Guyana, and those really focus on mining and agriculture. So rice, shrimp, sugar, main three agricultural exports. Many of you have probably had Demerara sugar on your porridge in the mornings, for the Scots amongst you. Demerara sugar comes from the Demerara River in Georgetown, Guyana. Unfortunately, they didn't brand the name like champagne did in northern France, but nevertheless, that's where that comes from. Otherwise, aluminium, bauxite, gold are the main industries, but in terms of really having an impact on the economy, are absolutely dwarfed by the oil and gas industry here. In fact, the public debt status in the country and the government deficit, which is 60% of GDP, as you can see there, a bit lower than us, has really been a result of having to restructure the sugar industry, and there's been more infrastructure expense. But frankly, Guyana hasn't even got started. You go to this country, the roads are in poor repair, there are no highways. It can take you an hour to get from one end of town to the other. Cost of electricity is north of 30 cents a kilowatt hour. That's 3x what we pay in the UK, because they burn fuel oil and diesel 100%. So they're desperate for their economy to be catapulted from cheap gas, which they're going to have plenty of from the offshore blocks, and foreign direct investment, which we believe is coming. One last little country fact, and in case you haven't jotted all of those down, if you want to keep on top of things in the country, two newspapers people read are the Kaita Times and the Stabroek. Kaita is a bit like the Daily Mail, and Stabroek more the Times. They're not quite the same level of journalism, as I'm sure some of the journalists in the audience will testify. But we've seen quite a few sensational articles, shall we say, in the Kaita Times, which have been laying a lot of criticism on how exploration licenses were achieved in this country. I think what's very interesting and important to note is one of the journalists behind that was fairly frustrated not to receive licenses when he bid in the early rounds for it, and there's been a lot of back and forth. Nevertheless, we've been running due diligence on a number of the investments, and everything in terms of how licenses were acquired, documented, accounts were submitted, have all been very much above board. Why is it going to be transformational to the economy? Bottom line, $70 billion is expected to be spent in the industry between now and 2030. Enormous potential. We can see the expenditure ramping up very, very fast to 2022 as we get Liza Phase 1 fully up and running. You can see some of the FPSO contracts have been awarded, some household names. SBM Offshore, Saipem, Technip, all in the mix here. You'll find Schlumberger in country too, and Halliburton, all with boots on the ground. But notably, Gisby is our local shore-based yard, of which Total Tech, the client we work with, is a major shareholder. We'll come back to that in due course. This is one of my favourite ones, because it's what I call the who's who slide. Some people know the country better than others, but if Stabroek is the beating heart with Exxon operating it, and the dominance of most of the oil found there, if you kind of go round the clock, starting in the north, Kaieteur is another Exxon block, which was basically awarded to Ratio Petroleum and Catalaya together a number of years ago, before 2015. They subsequently farmed out to Exxon, who's farmed some out to Hess. These guys are drilling in the second quarter next year, very close to Exxon's Exxon's Ranger discovery, just across the border. I don't know if I can point, but just there. So some of you may know that's where Ranger is. If I quickly flick around, you've got Kanjay further south, where again Exxon is cropping up again, and we've got Total in there this time round. What's truly unique about these two blocks in particular is you've got some very small independent players there who've ended up with pretty large stakes in one of the biggest world-class basins out there, given what's happened. Catalaya, to give you an idea, has a whole number of employees numbering 2 people. Their SG&A is very, very modest indeed. With the 25% stake in next door neighbouring Stabroek, the company's looking in a very interesting position. Same applies to the likes of Kanjay, where GHI Associates and Mid-Atlantic, 2 companies most people in the room might not have heard of. Again, junior oil companies went early when no one else wanted to be there. The tax terms are great. They got in early. Exxon farmed in very short succession after they started finding oil in Stabroek. The geological survey out there from the US suggests there's close to 14 billion barrels of oil and nearly 32 TCF of gas. That gas won't all be injected. The hope over time is that some of it will come on shore and make its way to providing cheaper electricity to the people of Guyana. Otherwise, I'd say there's very importantly on this, it just shows quite nice on this map Venezuela and Guyana. I think the last point I just make is it's no surprise there's a lot of oil here. All of us know about the reserves in Venezuela. It is very close, and very close to the extent that this time a year ago there was some Venezuelan warships straying into the waters to the north. That's one of the reasons I haven't talked about Roraima, Anadarko's 100% block, and one of the reasons why there's very limited activity in the north, because there's quite an active debate about where that borderline is. But if you were to draw a line between 12 o'clock and 2 o'clock, that's somewhere in the region where they're disputing it, and that continues to be a dispute. Elsewhere, geography-wise, we're very close to Trinidad and Tobago, which has been the main supplier of oil services equipment to these guys. But the Guyanese government are adamant that oilfield services is something that they will be able to procure for themselves. Now, here's the slightly more complex slide. Those of you who know me know I am not a geologist, so I'm not going to try and fully interpret a paleo-shelf margin here, but what I can give you is some real layman's terms. We've got source rocks, we've got traps, and we've got seals. The main risks in a region like this are migration pathways, seals, and timing. One of the things we've seen is trapped oil, and the only issues we've had to date have been whether it's heavy or sulfurous, which we've seen a little bit of evidence of, and I will come back to. But for the geologists out there, there's 3 main reservoir types: Cretaceous sand fairways, tertiary sand, and Cretaceous carbonates. Most of Liza, I believe, has been Cretaceous sandstone, and you can see from the various different horizons here where it is. If we look at the tertiary, if you go to the left-hand side of this chart, you can see tertiary Cretaceous. Most of the big discoveries have been found lower down there, closer to the source rock. Kanje, you can see, is even deeper. And something I didn't say about the map on the previous page, as you go further out, Guyana is like a terraced, the offshore is like a sort of a terraced landscape or terraced seabed. And the further out you go, you're getting into deeper waters, but also drilling the deeper horizons where there've been, arguably the oil's been less touched by movement and other interferences, which is why you've got some of the light sweet oil in Lisa. And the hope is that that can be replicated in both Kanje and Kaieteur coming very soon. I'm not going to spend too much time on this, but just a very quick overview, snapshot, gives you an idea of quite the number of discoveries Exxon's found, 88% success rate, 4 Lisa appraisal wells drilled, 6 billion barrels of oil, drilled within 30 kilometers of the paleo shelf, pay zones up to 300 feet with brilliant reservoir quality. The list goes on. These are all taken from Exxon. You know, I'm not going to leave it up there too long, but if anyone wants to take a picture, they can. Or come to me and we'll supply the information. Timeline, I think the chart, or this slide speaks for itself really. It's been a busy time in Guyana in terms of recent history and what's coming up. But just to draw the eye to a few things, I would say, that are still happening. At the moment, we've got a well result on Kanuku coming very, very imminently. That's in the block south of Arinduik, where Tullow, Total and Eco Atlantic are. It's a Repsol operated well in partnership with Total and Tullow. And we're expecting that to be hopefully a bit of good news before Christmas. I think we could do with it. Otherwise, on the political landscape, we've got an election coming up next year. I haven't deliberately spoken a huge amount about the politics. There is an awful lot of dispute going on. This time a year ago, the opposition party put through a vote of no confidence in the existing Granger government, calling for an election. It's taken literally from them to now to get to the point of having an election, running through disputes, and we'll see that election on March the 3rd. Interestingly about that, most of the licenses awarded here in the offshore have been awarded by the previous government, honoured by the current government, and as far as we're concerned, we don't think whichever government gets in is going to put a real spanner in the works here. The fiscal terms are attractive, the investment is going to be very large in the country, and we don't expect that to change. But we do expect them to put some slightly more onerous signature bonuses and tax regimes on new blocks to be awarded, of which there are several. The big one that everyone's focused on is Block C, which is next to the Kaieteur block at sort of 2 o'clock in that map there. I really just included this chart just because our associates and VPs are so brilliant at making waterfall charts, but you can really see the effect of all the different discoveries that have been made, starting with Lisa, phases 1 to 3, making up the lion's share, and it's fairly unprecedented in my view, the amount and quantum of oil so neatly spread out as that. But you can see on the chart to the left, another thing to mention, majority of the oil has been found in the Stabroek block, but 2 wells have been drilled in Arinduik, which is a little horseshoe block just to the left of Stabroek. Smaller block, obviously. Jethro and Joe were drilled in the summer by Tullow and their partners. They've subsequently said the oil's heavy and has sulfur content, but we'll learn more about that. As to whether it's commercial or not is another question. Because we cover eco from a research side, we've applied some pretty heavy risking factors on the commercial side to both those discoveries, but still see a number of other prospects. Now, productivity, Guyana's set to see a huge ramp in production coming up. I think it takes being in Georgetown to kind of get how people are thinking. Everyone's waiting for the oil to arrive. They're saying when the oil arrives, we're going to suddenly start making money. The funny thing is they're not going to see the oil because it's going to be shipped offshore. But there's this sort of this euphoric moment that everyone's waiting for when the first barrels start flowing. But I think it's going to take some time, and I think there are going to be some brilliant opportunities for kind of prepaid contracts, debt contracts at the government level to get infrastructure starting to be built in the country. But it really gives you a sense of the forecast production in the bottom right of where we're going from and to bring on nearly 1 million barrels of oil between now and 2030. You can argue whether it's good for the macro backdrop, but bottom line is, I think, and many may agree with me, we're going to need it. Importantly, Liza Phase 1 starts up next year, 120,000 barrels of oil a day, and Liza Phase 2 it will be going on a very similar development concept as Liza Phase 1, 6 drill centres, 30 wells, 15 production, 9 water and 6 gas, and it's starting up in 2022. So the train is moving, it's left the platform, and we're going to start seeing the effects. We had a LATAM lunch earlier this month where we had one person talking about potential for 14 FPSOs in country, which is obviously a significant amount of investment, and servicing of that will be required. Here's a really exciting bit, the fun bit, tax. I know everybody loves it. PSCs are pretty favourable in country. We're talking about varied royalties on a license by license. They're as low as 1%. We've got a cost recovery up to a 75% ceiling. Contractor profit oil is 40 to 50%, and a corporate tax rate at 27.5%. All of that's in the bottom right for anyone who wants to jot it down. But this is, I would say, can get a lot of scrutiny. But in terms of government take, it's not the best and it's not the worst. But by all means, it's sort of somewhere just below the middle. Other things that we get questions on: how can I get my currency out of the country? How does that work? How does a foreign exchange work? There's a floating rate, very few controls, and foreign accounts require approval prior to opening, but profits can be repatriated without the permission of the Bank of Guyana. And there's also a particular tax treaty in place between Guyana and the UK. And I think, again, it's important to really hammer home the partnership that the Commonwealth brings the United Kingdom and Guyana. We're very, very close to the consulate, and they're extremely helpful indeed when it comes to doing due diligence and connecting people to the right levels of government. I've talked a lot about spending money in the country, so we'll just go into the oil services backdrop. These numbers I'm not going to focus too much on, but I have them all in a spreadsheet for anyone who wants to sit down and discuss them at another time. But to give you a little bit of a feeling of what Exxon is spending, I think there's someone from Exxon in the room here today. I think they probably say, well, these numbers aren't right. Well, these numbers are from Rystad, but give you a sense that between now and 2025, we can expect somewhere just over $35 billion to be spent. Maybe there's hope for the oil services sector yet. We need demand for subsea trees, umbilicals, pipelines, all the usual good stuff. You can see what it looks like in a few pictures here. Well count going to above 30, subsea tree installations above 30. It looks like Exxon is planting a small forest down there. Total rig demand, 7 years, couldn't be more welcome for drilling industry on its knees. And surfline installation is making a material sort of tick up. Those of you who follow Technip, Saipem, etc., this is a huge part of their underlying profitability, given the lack of other FIDs we've seen in the world. So how do you play it? Other than the usual sort of household names, the likes of SBM, Saipem, Schlumberger, materiality will make a difference really for the SBM, Saipems and Technips of this world. Schlumberger, it's just business as usual. But here's a sort of overview of how Guyana is trying to service this industry. This picture here is a sort of not quite how it looks yet, but what we've seen has been a huge sort of commercial yard turned into an onshore support base. Currently today, there is only space for 2 PSVs, which you'll see, probably can't see it, but 1 and 2 sort of in the middle, just below that yellow crane in the centre. what's servicing Liza 1 development and exploration at the moment. That yard, you'll see here, those black things all lined up, it's drill pipe. This yard is absolutely full to bursting with drill pipe. The little yellow tent on the left is where Exxon keeps all of its core samples. The big green building, the little building just to the 1 o'clock of the crane, that's an SBM facilitation yard. We're putting money into this project right now. We're in the process of negotiating with various private equity investors, injecting money into a company called Total Tech, who own 20% of Gisby. The other 3 partners are private, family-based companies. So Total Tech's the main avenue to invest here. And what Total Tech is doing is building up a indigenous oilfield services offering. This yard particularly employs 96% of the workforce of Guyanese, and they're supplied mainly by Total Tech, who train them in their academy. It's an integrated services yard, pipe wash bays, berthing, loading, all the usual good bits of stuff that you need to supply an exploration campaign. And I think, interestingly, you'll see that it's on the Demerara River. In the bottom gives you a bit of an overview of the map. It's a pretty muddy, silty river. It's brown, like the sugar. You'll notice that blue blob to the bottom of that map is where this particular yard is, but it's one of the main sort of hubs of activity going on offshore. I've been there. It's buzzing. What looks like a runway at the very top of the picture is the expansion, and the intention is to move all the lower value items further onshore where they don't need the higher margin berthing space. So things like drill pipes will be stockpiled further inland. But a few hundred meters above this picture, it's basically just farmland, what used to be sugarcane. Upstream opportunities. I'm not going to spend time on these slides just because I'm sure you'll know Staybrook very well. I don't need to say a huge amount on it other than the fact we've got it starting up. We've touched it. Kanuku, this is Repsol, Tullow and Total. We're expecting well result very, very soon. I think the most interesting number is 200 million barrels, which is the expected or the estimated size of their first prospects, aptly named Karapa. Let's hope it's better than some of Tullow's previous news. Shifting on Kanjay, these guys are further offshore. So where we've seen Arinduik and Karapa drilling, which is sort of here, these two are in much deeper water. They're drilling deeper horizons. Some of the early wells there are going to be in north of 3,000 meters of water. So you're going to need a pretty sophisticated rig to do that. But these guys are targeting monsters, billion-barrel prospects, closer to the source rock. Kaita is the same. First well to be drilled is going to be the Tanager 1 well, which is 15 kilometers from Ranger, on the map about 7 o'clock, where it'll be. It's a multi-stack pay zone with a 70% chance of success according to Netherland and Sewell. It's public information published by Ratio Petroleum and Catalar Energy. These probabilities are through the roof. This is more like a step-out well than an actual frontier exploration well. Nevertheless, it's a 250 million barrel prospect, and there's a suite of 8 further prospects beyond that, adding up to over 2 billion barrels that these guys are getting after. Casalea basically went into this with Ratio, Israeli company, and they farmed out half of it to Exxon, who subsequently farmed out the other chunk to Hess. But this is another exciting well that's getting drilled in the second quarter. And as I wrap up, I'm going to just finish on Arinduik, which is where we've seen 2 successes already, Jethro and Joe. Yes, they're heavy. Yes, they've got some sulfur. We don't know if they're going to be commercial or not. There's a lot of speculation around it, but I think I'm going to let Alice do most of the talking on this. But there are a lot of other prospects in the Arinduik well as well. But just to focus on the geology, and this is risky because I know there's some geologists in the room here. We've got our own technical team in-house. We've got some advice from one of my guys who's a real expert. Please don't ask me to go into too much detail, but our theory is it's a sulfur a thermochemical sulfate reduction has caused the sulfur in the crude oil in Arindowick. It suggests that Jethro and Joe sit between what we call interbedded carbonates, which is, as you can see there, we've labelled Jethro and Joe through the different intersections where it's shallower and therefore not as hot, but it's still too hot for the bugs. And we think that interbedded carbonates is what's caused the sulfur, and we think the reaction with the sulfur has stripped out some of the lighter ends of the oil. Bottom line, both wells are apart, targeting different horizons. It implies it's likely not a reservoir-specific issue. But regardless, what it means for Eco, who are a 15% holder in the block, I have blobbed out all of the numbers because if you want to know them, you can come to me. But I would say here we've got a north of 200 pence a share, risked NAV for Eco Atlantic. Compares to their share price today, just north of 40 pence a share. We can see Jethro and Joe in the discovered NAV columns there, but you can also see over 10 other exploration prospects there, many of which are in the Cretaceous and slightly deeper horizons. Alice is going to take over from me and explain to you a little bit more detail, the zoom in on Eco, but I hope there are one or two facts and figures people have been able to take away from that. And I'd obviously welcome any questions people have at the end. Thank you very much.
Okay, good morning, everyone. Thank you as well, Eversheds and Minas, for the invitation to be here this morning. Just quickly to say, Gil Holtzman, our CEO, sends his apologies for not being here today. He's actually speaking at a conference over in Tel Aviv this morning. Given that he lives there and I live here, it made sense that we divided and conquered this morning. So by way of just a very brief introduction, I joined Eco this year to be our London-based representative and to lead our IR and marketing efforts. Previously, I've spent 5 years with private equity firm Seacrest Capital Group, overseeing their 6 oil and gas investee companies globally, one of which was Hannam. They were based in Southwest Africa, a company which Eco actually brought into Namibia in 2012. And it's through that strong partnership and working in Namibia that I've known Colin and Gil, who founded Eco Atlantic, for some time. So Colin, who's our CEO, and Gil met over 10 years ago. They both bring varied and extremely dynamic skill sets to the table. Gil has a vast experience in Africa in the mining sector and has been completely instrumental in negotiating terms for country entries for us in the likes of Namibia and Guyana. Colin started in a family business drilling in the Alberta oil sands and has become an industry vet, contract drilling for super majors for some 30 plus years, operating and exploring all around the world, including heavy oil drilling in Canada, Madagascar and onshore Suriname. Colin runs a company called Kinley Exploration, which is a team of highly technical geologists and reservoir engineers. They serve as the operating arm for Eco Atlantic. And Kinley conducted extensive research and exploration around the world, looking at ancient river systems, mapping sands and source rocks, and looking for trapped hydrocarbons. The Arindowick block offshore Guyana rose to the top of their list, and the licence was applied for and negotiated prior to any discoveries being made within the country. We're absolutely thrilled to have Keith Hill, maybe a recognisable face, join our board following a strategic alliance, Africa Oil Corp, formed with us in 2017, where they came in for 18.5% of our shares. Many of you may or may not know, Africa Oil Corp are a $500 million US oil exploration company backed by the Lundin Group. And they make strategic investments around the world into smaller companies like ourselves, where they have a conviction in exploration upside. And we're also joined with Africa Energy and Impact Oil and Gas in Africa at the moment. So our portfolio, we're an independent exploration company with 100 million market cap, and with positions in 2 countries. We have 4 blocks in the Walvis Basin offshore Namibia. I won't spend too long on our assets in Namibia because you're all here to hear about Guyana, but it's worth just mentioning there are 4 wells planned in 2020-2021 offshore Namibia. By some leading names, we've got Merrill and Prom drilling just to the south of our acreage position. Total and Shell are drilling in the Orange Basin, and we have ExxonMobil drilling right in the middle of our acreage, just here. But following the stretch marks of the Atlantic over to Guyana, we have 1 block, as Hamish said, the Orinduik block. We initially negotiated this block at 100%. In early 2015, and then Exxon came in and hit 1 billion barrels just a few kilometres away from us, and we were urged to bring in a partner. At the time, we were operating for Tullow in Namibia, and we invited them to join us. We struck a 60-40 deal with Tullow, with them covering our 2D commitments, upfront costs and payments of the 3D commitments. We've since farmed out 25% to our friends at Total, and they've since invited Qatar Petroleum. So the block, as it says on here, is now held at 60%, 25 and 15. Our strategy was always to get to 15%, where we get a NAV share of the asset for a company our size, but only 15% of the drilling bill. As Hamish's slides have already shown, our block is immediately adjacent and up dip of ExxonMobil Hess CNOOC Stabroek block, and we're delighted to see and very encouraged that these are hitting first oil imminently 5 years after discovery. We have extensive seismic data coverage over Orinduik, over 3,000 square kilometres. We have 15 prospects defined on a competent person's report, which are estimated to hold 4 billion barrels. This summer, we drilled 2 wells. Jethro 1 well, which completed in August, was a major oil discovery in the lower tertiary, actually exceeding our pre-drill expectations. And Joe 1, which completed shortly after in September, which was another successful discovery, and a play opener actually in the upper tertiary. The market response on the discoveries was expected. Our shares jumped from our listing price in 2016 of 18 pence up to 175p. I think it's safe to say, with the 2 back-to-back discoveries this summer, we knew we'd hit a 6. Tullow recently announced lab results which confirmed the discoveries of heavy oil with a high sulfur content. With no mention of development alternatives at the same time, I think this left the market considering if perhaps upstream need to amend this cartoon to a catch on the boundary. Both wells confirmed a major heavy oil play with excellent clean reservoir parameters, with high porosity. The oil's warm and overpressured. It has gas in it, and it all makes the oil mobile. The good news is our team has extensive background in heavy, and we're looking at alternatives to bring these wells to commerciality. Like the similar oils in the market already today from the North Sea, Gulf of Mexico, Campos Basin in Brazil, Venezuela and Angola. I'm sure some of you here know that Total are the #1 operator in Angola. But of note here is that much of the heavy around the world is slowing in production, likes of the North Sea, or almost completely stopped in the likes of Venezuela. And that means that the plants that actually refine this product are hungry for feed. And the research that we're doing is telling us that when the lower demand for the heavy is increasing, it's looking that the differential in pricing to Brent will narrow. So we believe we've definitely still hit a 4. This map on the left here shows our prospects generated from 3D seismic interpretation. You can see we have a highly prospective inventory. So far we've just drilled the 2 in the tertiary, which have confirmed 300 million barrels. We've only really just scratched the surface. As Hamish pointed out in his slides, on a risk basis, you can see what the size of the prize is. And also you mentioned the terraces. I think this image here might explain a little better. I'm not going to try and talk to the geology. I'm not geologically trained and I'm likely to fall into traps. But just drawing your eye to the left, we've got the Joe and Jeffro first two discoveries which proved oil in the tertiary. Both wells were drilled quickly and were cost efficient. We chose the tertiary first as the chance of success was higher for our shareholders. It opened up a completely undiscovered play in the case of Joe, and from a development standpoint, the area has a very material resource for development. So what excites us about Guyana is the play diversity. 2 discoveries so far with Joe and Jeffro, and the seismic data over the Hammerhead discovery confirms there's an extension over the boundary into our block on Arindok. We have 15 plus identified prospects on the block. We have a very receptive operator to technical and engineering input from both ourselves and Total. We have fantastic neighbours in Stabroek, and we have excellent fiscal terms with a 1% royalty rate and a 50-50 share on profit. Hamish touched briefly on the politics earlier, but Charles really asked me to give our view on ECO's dealings with the authorities day to day. Clearly, the government has a lot to consider given ExxonMobil's success, but they're taking all the right steps. They're seeking third-party advice and drawing on other countries' experience, namely Norway. Our block was the last block awarded back in 2016. And as the country's grown, we've found the authorities, the government who's led by the gentleman down in the left-hand corner, the President and the Department of Energy and the regulator, Guyana Geology Mines Commission, they're very professional to deal with. They're meeting the challenges with lots of advisors and professional help in both resources and economics. And one of the things that made us comfortable with Guyana was its history and membership with the Commonwealth of Nations, the fact that English is its first language, and the country's strong legal system, which is actually based on English law. But perhaps the best way to explain, and Hamish alluded to it earlier, is how we came to apply and be awarded the block, and therefore make country entry. We negotiated this block with the GGMC under the then Minister, Barak Jagdego, in 2014. He was representing the People's Progressive Party. He's now the leader of the opposition, and it changed over in the general election in May 2015. Our agreement was then actually signed and approved, having been unchanged in January 2016 by the current government, David Granger, and he represents the coalition party. So I guess what we're saying is we've dealt with both sides. We're very comfortable with whoever is in power. I also mentioned earlier that ECO entered Guyana in early 2014. Discussions were progressing extremely well, but then, as I said, this happened. Exxon found Lisa, and we have here their country manager showing the well logs to the president and the minister. Clearly great news for the country, even greater news that a reporter took a picture of the highly confidential photo. But it led to our application being delayed for 8 months and being asked to bring in a partner, which, as I previously explained, we brought in Tullow. So in summary, the Guyana authorities are very professional, very transparent, and hugely engaged with the industry right now in this significant time of growth. As we all know, frontier exploration along the Atlantic margin has historically been in low GDP countries. Huge discoveries, influx of revenues dramatically shape these nations. We believe we have a responsibility to proactively and positively support the countries that we operate in. And we pride ourselves on excellent relationships that we have with the people of Guyana and Namibia. We take a people-centred approach in our CSR policy, and just a couple of highlights here of things we've been involved with this year. If you look at ECO's history in both Namibia and Guyana, we are very comfortable bringing the government in as our local partner and providing training and support to develop the local expertise and to promote sustainability in country. I'll leave you on one final cartoon, but with one final message. There's plenty more fish on Arinduk to fill the rest of this tank up, and we're looking forward to doing so with our partners next year. Thank you.